And joining us now to share his commentary on the day's market performance is Robert Towell from Sasfin Securities. Rob, thanks so much for your time this afternoon. I think let's start off with U.S. inflation, right? Holding steady at 2.7%. We did see a slight uptick in core inflation, but that doesn't seem to have moved markets at all. In fact, investors are still pricing in a rate cut come September. Just your reading on that print.
Yeah, so there's a little bit of pressure in the number. So tariffs are slowly putting some pressure onto the inflation, but not at the point where it's causing a huge jump in inflation just yet. So I think that was very positive for the US, and I think that it leads the Fed to be allowed to start to cut rates. If we do get a rate cut in September, that'll be very positive for equity markets in the US, and it will lead to better markets elsewhere as well. So I think it's very positive for markets that print wasn't too strong, and inflation seems to be kept at bay at the moment.
All right, let's move over to some company news. Another bumper quarter for Tencent, topping market estimates. It's also doubling down on AI spending, using proceeds from its gaming unit and super app WeChat to fund that initiative. Just your analysis on the numbers. And is this one, I guess, one of the top picks when it comes to investing in the Chinese AI space?
So I think it is definitely something that you should look at if you're going to invest in China. Their gaming numbers are very good. They had new games that came out, Delta Force, which was a single-man shooter game, which has done very well, and that division's done very well. Growth up in that section, 28%. So very strong growth in the gaming side. And then across the board, WeChat is a staple in China. Everybody uses it, and with that, it's very easy to monetize. So yes, I think it's a very good business to be invested in if you're going to invest in China. And you've seen it obviously through Naspers' share price today. So Naspers leading the market locally and pushing our market up as well. So a very good, solid set of numbers. Their capex came down actually in this quarter, but it looks like it'll ramp up again in the next quarter. So they're growing very well. They don't have a demand in PE either, so their valuations are not overstretched by any means. If you take a look at some of the other AI counters that you would get outside of China, so they're very good, well-run business with a very big natural market locally in China, and then obviously going out to the world as well. So a very good business. We like it. We still buy Naspers and Prosus as well as a proxy to Tencent. And it's definitely something you should keep in your portfolio.
And Rob, I wonder if the concerns around AI spending and high AI spending have simmered down. Just looking at some of the tech counters, even the US tech counters, and the numbers that have been out when it comes to capex, particularly on AI. I'm sure you do remember that at the beginning of the year, we had, concerns around this AI spending and whether we will see a return on investment. Has that simmered down? Because it does seem like many of these tech companies are powering ahead with their spending plans.
So spending is still increasing on the AI side. So they're still buying chips. They still have to put into data centers and larger data centers, and onto the power side as well. There's a lot of spend going into building those data centers and powering up those data centers. So that they're putting spend into that as well. So no, I think that the AI spend and the capex into AI is going to continue. And I think really what it's showing is the bigger you are, the better at this stage. And the big players like Meta, which is Facebook, Amazon, etc., that really do have a lot of free cash flow, are spending more and more. So I think that trend's going to continue, and the biggest players are going to be the winners in this environment.
Definitely spending more on those data centers and spending more on, getting the best talent in the sector. Let's move over to Nedbank. They're deepening their position in the SME market with the acquisition of fintech player iKhokha. Not much action when it comes to its share price. What's your reading of this acquisition? To me, it seems like, it fits well within Nedbank.
Yes, it does. So I think that it's a very good purchase for them. It puts them into the market, maybe in the lower LSM, where people are using much smaller transactions with their fintech. So you're using much smaller transactions and a much better access point for them to get those lower transactions rather than trying to just get it naturally through their own bank. So I think it's a good purchase for them, and we'll see how much it grows.
Still in the banking arena, Capitec out with a update forecasting an earnings jump of as much as 27%. This kind of growth expected, right? Doesn't seem to be surprising us because they are known to, record those double-digit growth numbers when it comes to earnings.
I think it does surprise the market to a degree, where the market thinks that the South African economy is under a lot of pressure, etc., and they're continuing to be able to grow at this pace. So I think sometimes it does surprise, but Capitec have managed to be in the right sectors, building the right products all the time, and across the board, all of their sectors actually did very well in this set of numbers. So a very good set of numbers. Again, the share price has reacted well. It's up about 2.3% today. And solid, continually good growth numbers. I think it's pushed some of the other banks up today as well, and that's also why you see Nedbank's transaction into a fintech player, where they can start to compete in the lower end of transactions on a slightly less formal market. So you're starting to see other companies trying to compete with them now. So a very good set of numbers by Capitec, and I think that it doesn't have an overly demanding PE either with the growth that it's got. It is more expensive than the other banks, but also grows much bigger than them.
Just quickly before we get into the stock picks clips, Rob, are there concerns? I mean, you mentioned that markets are surprised to a certain extent considering where growth is in South Africa. Are there then concerns around the momentum of growth and whether we're going to start seeing perhaps a normalization when it comes to those earnings numbers?
It's difficult to tell because our South African market is, there's a big informal portion of it, which is generating a lot of revenue. And you've seen Capitec mention it before, saying that there's a very, very large informal business sector, which is deemed as unemployment, where they deem it as not being unemployed. And so you're starting to see informal businesses start to be more formally banked, and I think that's where the growth is coming from. So we'll have to see if it goes through the whole economy and through to other banks, or is it just the lower end and the informal side, which is starting to get banked a little bit more formally on a transaction level, and maybe less cash going through the system, and you're starting to see uptick from that. So we'll have to see. South Africa is still under pressure. We do maybe have another rate cut coming if the US cuts their rates, and that will start to generate maybe a bit more spend into the market as well.
All right, before we move on to your stock pick, let's take a moment to touch on what counters your industry peers are watching closely.
I'm finding value in a real estate company that is domiciled in Malta but is listed on the JSE, MAS PLC. And it's been in the news because there's a bit of a tussle between some institutional shareholders and a group headed by Martin Slobbert, Prime Capital, who's also the controlling partner in the development joint venture that MAS PLC has with Prime Capital. And Mr. Slobbert is offering to buy shares from people at just under 29 Rand. And I think that will align the interests of him and external shareholders. So I expect the value unlock strategy to be followed the next 18 months. And the trick here is we have a lot of very astute, shrewd entrepreneurs in our local property sector. And the golden rule is also always make sure you're sitting on their side of the table, not the other side of the table. And I think with the latest transactions and what will happen from here on out the next 18 months, for the first time in a long while, minority shareholders in MAS will sit on the same side of the table to Martin Slobbert, and that's why I think that current prices with this value unlock strategy the next 18 months, you can do very well with MAS PLC shares.
Yeah, so going for Capitec, they gave a trading statement today. I think pretty much in line with what we were expecting. We'll have to wait for the detailed results, but I think this company, if they can continue to generate quality earnings next to 10% over the medium term, is very well positioned. Share price hasn't done much this year. One of the large shareholders, of course, have been selling. They continue to do acquisitions that selling also stops. I think that's going to help a little bit going forward, but they've also doing acquisitions in East Africa. And if you look at the margins there, it's quite well. So it seems like that capital allocation strategy is working. So we are, of course, optimistic. We think it's one of the few structural growth stories in South Africa, irrespective of what the economy is doing at the moment. So an evaluation we think is fair as well. So we like Capitec at current level.
Advitech and Mass PLC. Are these counters you're seeing value in at the moment?
So we like Advitech. We think it's a very good business. It's still got growth potential. From locally, people moving away from the very expensive private schools into slightly cheaper private schools as well. So that's got a good growth. The private universities are also growing quite nicely in South Africa, and then they've got African growth as well. So that's been run very well over a long period of time. So we like Advitech, not overly stretched on its valuation. So yes, we would be a buyer of Advitech at these levels. On the Mass PLC side, there's a very complicated transaction going through at the moment to be bought out at 29, and there's a possibility that you get 29 Rand for your shares for only a portion of your shares, and then you're left with a portion of shares which is going to be very liquid. So if you're prepared to wait for the full 18 months, then I think it's something that you could look at and add to your portfolio. But if you're thinking that you might just get 29 Rand in the very short term, I don't think that might happen. So I think you must show caution. You must definitely have an 18-month outlook if you're going to enter Mass at these levels.
All right. Where are you seeing value at the moment? What's your stock pick, Rob?
So I think maybe value is not the right term, but we still like the banking sector in South Africa, and we like FirstRand. They got a relatively favorable outcome from their court case in the UK. We haven't got an indicative price on any fines that are coming through until October, but I think that the main court case was very positive for them. And I think that you're just going to see a little bit of growth coming out from that UK business going forward. And I think locally they're very well situated to get some growth out of the South African economy. So I think you can be buying FirstRand at these levels, and you're looking for around 85 Rand target price.
All right, let's leave it there. Rob, thanks so much for your time and taking us through trade at midday. And that was Rob Towell from Sasfin Securities.